Michael Burry warning, this market crash is about to affect millions of people. Get ready before it happens. The stock market is going to crash in the next 3 years and wipe out half the market. Either that or the feds will continue to print so much new cash to avoid a crash that your savings will be worth half their current value. Today we're going to talk all about the upcoming stock market crash. So watch the video till the end because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway in the comments. Now let's get to our topic. The stock market is going to crash in the next 3 years and wipe out half the market. Either that or the feds will continue to print so much new cash to avoid a crash that your savings will be worth half their current value. For tens of millions of zero-asset Americans and those with the means and discipline to save for the future, these punishing scenarios amount to 6 of one, half dozen of the other. But the grifters who profited wildly from the debt-fueled rise in real estate, stock, and crypto prices don't care, because they're all in on the scam. You know the market is a fraud when share prices double or triple despite profits getting crushed by a global pandemic. A crash is coming, it's just a matter of when and how large. The Economist's intelligence unit thinks a bubble burst is highly probable. John Wolfenbarger of the Mises Institute thinks this crash will be worse than 2008, dropping at least 60%. Michael Burry of The Big Short fame thinks we're in a massive bubble and the looming crash will be the worst in history. Approximately 50% of Wall Street strategists think the S&P 500 will end the year below current levels. Bank of America thinks negative 10%, Morgan Stanley thinks negative 20%. Investor John Hussman, who predicted the dot-com bubble burst, thinks the market will crash 66%. Jeremy Grantham thinks we're in a bubble the size of 2008 or 1929. The European Securities and Markets Authority also thinks we're in a bubble. Mega criminal Warren Buffett thinks a crash is coming and has over $140 billion ready to deploy. The top 15 non-financial companies, including Apple, Alphabet/Google, Amazon, Microsoft, and Meta/Facebook, also think a crash is coming and have stockpiled more than $1 trillion to go shopping when it does. Here are 5 reasons why we're in this bubble and why it's going to burst. Number 1. Insane new investors. Boomers robbed them of their future, so instead of even bothering with futile attempts to build real, productive, contributive businesses in the face of government-controlling tax-evading multinational monopolies, they decided to passively play the markets instead. Enter commission-free predator apps like Robinhood. In the past 2 years, millions of young people have jumped onto these platforms and are treating the stock market like the casino it is. Unlike traditional value investors who pore over thousands of pages of documents in order to make sound decisions about stock purchases, young people essentially trade the news or even mere tweets. Just look at who's run Tesla up to $1 trillion, even though it's not worth 1/20th that much. But you'll never convince a BitBoy or a Tesla maniac that meme stonking isn't a risky house of cards that's bound to collapse. After all, everyone's an expert during a hysterics-fueled bull run. Joe Kennedy, the infamous father of President JFK, managed to dodge the 1929 crash after having an epiphany while getting his shoes shined on Wall Street, saying, "When even shoeshine boys are giving you stock tips, it's time to sell." But rents and food prices are going up, and when this bubble does pop, all these young people won't have jobs or free internet money. Number 2. Borrow to invest. Why hasn't the world learned our lesson by now? If you let millions of people borrow money to buy the same stock, the stock price will go up, which allows stockholders to borrow more money, so they can buy more stock, and create massive market bubbles that eventually burst and destroy millions of lives. I'll say what no corporate-captured political party will ever tell you. It should be illegal to invest on margin, especially for crypto. Thanks to DeFi, perhaps no market is as hyper-leveraged as the $3 trillion crypto market, which may have less than 10% real wealth behind it. But when people need to withdraw to pay real bills, or when the US starts heavily regulating the space, trillions will get wiped out. Number 3. Wild valuations. The price-to-earnings P/E ratio is considered the benchmark number for comparing one company's stock price to another. The ratio is based on the current stock price divided by the trailing 12-month earnings per share. If a stock price is $10 per share and the PE ratio is 10, it means that the company is earning $1 per share. If you buy a $10 share with a PE of 20, it'll roughly take you 20 years to break even. Warren Buffett likes to buy stocks with a PE of around 12. The S&P 500's long-term median PE ratio is around 15. S&P 500's current PE ratio is around 29, nearly double its century-long average, despite the pandemic. #bubble. Apple's PE is typically around 30, Amazon's PE hovers around 60, and Tesla's PE ratio is currently over 330. That's $1 worth of earnings for every $330 invested. Would you really buy a business with an ROI of 0.3%? Would you acquire a company that would take over 3 centuries to break even? Number 4. Inflation. When governments print trillions of dollars out of thin air and loan it to investors to pump into asset bubbles, the price of everything rises. When prices rise rapidly, people starve, freeze, go bankrupt, or take to the streets demanding change. That's how Hitler came to power in Germany. When inflation soars due to price rises due to money printing, governments have 2 choices. A. Raise interest rates and likely trigger panic and a crash that lobs 50+% off the market in the next 5 years. Or B. Print more money out of thin air to keep the bubble inflating, but in doing so, robbing the poor of 50+% of their purchasing power in the next 5 years. So far, corporate-controlled governments have chosen option B, but are now signaling that they desperately need to raise rates to slow down inflation. However, there's no way their banker bosses will let them raise rates nearly as much as it needed to save the currency from depreciating. But if they keep robbing the poor via inflation, there will soon be mobs in the street, which also tends to crash markets. Number 5. Other factors. There are a ton of other factors that could lead to a huge market crash. A worsening USA-China relationship, a terrorist attack, new COVID variants and over-responses from increasingly authoritarian governments, a major cyber attack, social unrest and protests, supply chain disruptions, extreme weather events, and contested elections and capital battles on a scale we haven't seen since 1812. Typically, one of these factors will set off a chain reaction that takes down the whole market. Remember, the dot-com bubble shaved 49% off of people's investments, and the S&P 500 dropped 57% in 2008, and millions lost their jobs and homes. The next crash will almost certainly be far worse, by many trillions. However, the average house, stock, and crypto investor already knows all this, and they still don't care. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye.